This market looks absolutely terrible. Bitcoin continues to go down. The altcoins continue to get crushed. Now we have anticipated this, right? We talked in premium various times about how I have sold everything, how we should de-risk everything, how we should buy other asset classes to diversify. And in this video, I want to revisit our thinking at the time. I want to revisit all the models we were looking at. And I don't just want to talk about the selling. I also want to talk about the buying, right? I'm not a perma bear. I also am bullish sometimes, believe it or not. So let's revisit all of those videos. The first video I want to talk about was published at the end of October of last year. That's where we've got this vertical line over here. This is where a lot of people were speculating on a further retracement again. Most of crypto YouTube thought we would see a Bart Simpson similar to Q3 of 2023. Now here's that premium update video at the time. Let's have a quick look. What we have over here is Bitcoin with its best SMA and EMA. Whenever we go below those two, we'd turn bearish. Right now, the likelihood of Bitcoin rather rising than falling is high. What I found interesting when looking at these prior rallies, right? When we really broke out of the moving averages, we very often got a second rally just a few days afterwards. It happened over here, it happened over here. It didn't happen over here. Let's see how this develops. We're still levered long in Bitcoin, 1.3x. So in case we do see a second rally, this will be good for the pool. Here we've got Ethereum relative to Bitcoin, which is at a very strong support. That was one of the reasons why we put our Polkadot short both relative to Bitcoin and Ethereum. So we're now holding 3% of the pool value in Ethereum. It doesn't really move the needle much, but my overall impression of this market is that Ethereum does have a decent chance to rally short term. I don't think that it will rally long term. I still think that people rather park their money in Bitcoin than Ethereum. I think that the Bitcoin ETF approval is likely going to change the dynamics of Bitcoin versus ETH. As a layer one, it's also pretty much outdated, has a lot of competition. So I wouldn't be surprised if at some point we do see the support breaking. But right now it seems to somewhat hold. I'm talking about a pool in that video. That's because at the time there was actually a premium community pool. People could allocate money directly to a capital pool and I would be managing that pool. That has now been closed though. The main reason for that is that I personally simply feel very much stressed managing other people's money, but still I share every single trade that I do within the premium chats. Now what we've got over here is Ethereum relative to Bitcoin, and the vertical line is when that prior video had been recorded. So that was when the price was very close to that support. And that support indeed held somewhat. We did see a rally of 12% for Ethereum relative to Bitcoin. And then Ethereum tended to rather continue to bleed versus Bitcoin. If you're asking me today, I'm not really a fan of Ethereum, even though an Ethereum ETF approval has already happened. The Ethereum ETF isn't yet trading, but I do not believe that a lot of people will actually buy the Ethereum ETF. And so my preferred vehicle to park money within crypto is still Bitcoin. Let's talk about the cycle top over here in March of this year. Since then, the price of Bitcoin fell by roughly 22%. Here's the premium video published on the 14th of March. So one day after that all-time high. Welcome to another premium update today on the 14th of March 2024. This update comes out a bit earlier than usual. Usually it takes 4 to 5 days for every market update. This time I make an exception because there's something somewhat urgent going on. I have changed my opinion on Bitcoin. So we're not going to talk about open trading positions. We're not going to talk about the wallets. We're going to talk about solely Bitcoin today. I am selling 10 to 20% of my Bitcoin holdings, and your situation might be very different to mine, but I see the market at least temporarily being somewhat heated. Let's get into the models. And if you've been following me for a while, then you know that I like to use fixed systems, fixed rules. I don't just like to decide based on a whim. I like to decide based on data. And the value days destroyed multiple turned red just recently. This doesn't have to mean that we have to top out here. In fact, I don't actually think that we are topping out in Bitcoin. More on that later, but simply just have a look at this, right? We are now red again. And in prior bull markets, we did see multiple of those red signals. So the first one in the last bull run was in December of 2020, and we had another 3x from there. Same over here, June of 2027, we even had another 9x from there. So I don't believe we are currently at the market cycle peak, but I do want to point out something. In the end, I always talk about having a balanced portfolio, and that's because you want to somewhat manage the risk, right? You want to manage how much you can potentially go down in your wealth. And if you have been dollar cost averaging into Bitcoin for quite a while, and you took those nice prices of 16K and you bought in a lot, and you thought at the time maybe 10, 20% of my overall wealth should be in Bitcoin at the time because the deal is very good, right? It's very cheap. Then now where the deal isn't as good anymore, and where already quite a few random people talk about Bitcoin, I'm getting contacted quite frequently by now a random aunt or random colleague that never had anything to do with Bitcoin. They suddenly talk about it again. That's a sign for me that this shuffling is starting, that the long-term holders are selling and that the short-term holders start to take over. This is basically what this value days destroyed multiple means. It simply means that people that tend to usually not sell started selling. And just because now more coins are being held by the short-term holders or by new entrants doesn't mean we have to instantly crash from here, right? Very often we simply continue for a while, but it does show that things aren't as stable anymore, and we have to adjust our portfolio based on probabilities. And that's why I say this is also an individual decision, right? You might still not be overexposed to crypto. You might have entered also relatively late, and you might not have a problem whatsoever if Bitcoin dropped now 30-40%, and you could buy enough with the cash that you've got on the sidelines. You've got still a lot of cash flow relative to your wealth. If all of those things are true, then maybe you might not want to sell here. But if you are overexposed now, and if you would not feel great about a potential drop of 30% in Bitcoin, which is possible, then maybe it also might make sense for you to take some chips off the table. The picture doesn't look bad. It simply doesn't look as good as a few months ago. So the picture starts to get somewhat mixed. Here's another model that I like to look at. This is not value days destroyed, but coin days destroyed, but pretty much the same. And we can see that in the prior bull market, this peaked out a bit earlier than in 2017. So one could draw here an imaginary line. This is actually what I posted in the announcement channel, and we'd already be very close to a potential next top. But again, right, there might be still a little bit more upside also based on this model. So again, I don't believe that this is top prices. This is simply just a risk adjustment for me. Here's another model that doesn't look too great. This is the realized hodl ratio. So this looks at the speculation of the 1 to 2 year holders relative to the 1 to 2 week holders. So obviously when there's a lot of short-term holders, a lot of short-term speculation, this is high, and this is when the market tends to be heated. This is when you want to get out potentially. Of course, only if you want to ride those waves, right? In the end, a totally viable strategy is also to really never sell your Bitcoin, to simply ride those bear markets as well, and to continue dollar cost averaging during those bear markets. And you're basically just buying into Bitcoin, similar to contributing to a mortgage when you're paying off your house, right? You can simply just buy and forget and only revisit this when you retire in 10, 20, 30 years, whatever your target is. But yeah, again, see this imaginary line. We peaked up way higher in 2017 than we did in 2021. And now we're getting close to those somewhat dangerous levels. So it's nice to revisit those kind of videos again, right? This video was published over here, and I didn't necessarily sell that we are at the cycle top and we have to sell everything. I only sold parts of my Bitcoin. I didn't sell everything. But it does show how good on-chain metrics work, right? When the value days destroyed metric is going up, when the long-term holders, the long-term whales are suddenly moving their Bitcoin, then it does make sense to at least de-risk when you are overexposed to Bitcoin, because prior you, for example, took 1.3x leverage. This is what I personally did. Let's continue. Let's have a look at the video published at the end of March. Welcome to another premium update today on the 27th of March, 2024. Let's have a look at the overall market. I have just sold some more Bitcoin. I will share why. Let's have a look at the open positions, the positions that I'm going to sell and the positions that I've just bought. Let's talk about the improvements to premium, and let's talk about wallet tracking. But first things first, Bitcoin. The demand for the Bitcoin ETF has massively slowed down. We've seen quite a bit of outflows in the last day. Now, annualized over the last 14 days, we only have 1.9% of projected BTC supply absorption. Now, what does that mean? That means that if we just look at the last 14 days and we assume that those 14 days are typical for the ETF inflows, then over the course of 1 year, 1.87% of Bitcoin supply will be absorbed by the ETF. Now, is this good? Is this bad? It's better than nothing, but it's definitely below what most people were anticipating. Now there is Bitcoin mining happening, right? 1.7% of new Bitcoin supply hits the market every year, and that demand here by the ETF is already larger than that. The mining will also be cut in half in just a few weeks, so there is still net purchasing. On top of that, we also have roughly 2% of all of Bitcoin getting lost every year. So yes, the supply is shrinking over time, and yes, Bitcoin will very likely outperform fiat inflation. M2, so the amount of dollars that are floating around, is expanding by roughly 6.5% per annum. So on top of that, we've got the contracting Bitcoin supply. So of course, the Bitcoin price over the very long term will go up. That being said, this 1.87% metric is very, very low. And if you just look at the history since the 10th of January, we've never seen that many net outflows. So in case this turns negative, maybe there will be even some news around this. I believe a lot of the recent Bitcoin rally was due to speculation that the Bitcoin ETF is scooping up all of that supply, pushing up the price. Now, we don't necessarily see this. And so in the worst case, we could actually see an awakening of the market, a deleveraging of the market. And that's why I took some chips off the table, amongst other things. Let's have a look at those other things. Let's have a look at the value days destroyed multiple. And this is now just at a very high level, indicating that the long-term holders, the long-term whales, are selling. And this does not necessarily mean that the price has to directly come down from here, but definitely means that we are heated. So this is the second video where I talk about the value days destroyed multiple in premium. This metric, by the way, is 100% free. So simply search this in Google, right? Search VDD multiple, look into bitcoin.com. You will find this chart, and then you can put this into your bookmarks and track the next bull run yourself. We've got 2 more videos. Let's have a look. The next one was published in the middle of June, on the 18th of June. Again, we are of course not watching the entire video. We are simply just watching the Bitcoin part. Today is the 18th of June 2024, and this might be a day that becomes somewhat historical for Bitcoin. We are very, very close to the 120-day simple moving average. We are very close to potentially turning bearish. The 120-day simple moving average was a very good indicator to distinguish bull from bear markets. If we cross with the price below the 120-day simple moving average, things tend to turn sour very quickly. On top of that, we also haven't seen a lot of inflows into the Bitcoin ETFs, and the stablecoin market cap continues to just go sideways. All of this is not positive. I want to revisit that backtest in this premium update. I want to talk about this again because not everybody that's following here has actually seen the backtest, because those are actually relatively old videos, but I still very much believe in the strategy. First things first though, this is Bitcoin with the best EMA and the best SMA. The 120-day simple moving average is the one that worked the best historically for Bitcoin. We are still above very, very slightly. So the price that we need to break is 65,150. We have dropped within the day below that. We have recovered there. The backtest only looks at prices end of day though. So we could also bounce here. This is now the moment of truth. Let me show you the backtest results again. So this is data that only goes until March of 2023. I had rerun the numbers once. I can't find that Excel sheet anymore. The results are pretty much the same, so it doesn't really matter. The data starts in August of 2017. And we have backtested all kinds of moving averages from 1 day all the way to 200 days. And the strategy is simply to get into the market, potentially with leverage, whenever the price is above the moving average, and to exit the market whenever the price goes below the moving average. And historically, the 120-day simple moving average worked the best across all of those moving averages. So have a look at this again. We can actually plot the results of the data for the SMA and the EMA on a chart that's over here. So on the x-axis is the duration of the moving average. On the y-axis is the annualized performance. In black, we see buying and holding. So that's just as a reference price. Over that time period, Bitcoin would have given us 19% per annum. And we can see that pretty much any moving average tends to outperform just buying and holding. So going with the trend is a thing. And here's our best exponential moving average, the 71-day. But the best simple moving average is over here, the 120-day. So historically, we would have gotten 145% per annum had we traded according to the 120-day. Now this is then how that looks like over time. In white we see the Bitcoin price, and in turquoise we see the back-tested result. This is now a linear scale, so we can't really see what happened here in the early days. We've got the same here on a logarithmic scale. We can really see how nicely we tend to appreciate with that moving average. We also bet on falling prices, by the way. So whenever the price falls below the 120-day simple moving average, this backtest assumes that we're even shorting Bitcoin. I'm not sure if we have to short Bitcoin, but I'm definitely going to short altcoins once we fall below. And so this simply just shows how well this works, right? The difference between those lines also tends to expand over time. This is a very nice constant outperformance. Here's the same for the exponential moving average, the 71-day. It's not as good, but still it somewhat works. And so since moving averages work so well, and since the 120-day simple moving average works even better, I take a break like this very, very seriously. If we close a day below this, then I'm going to sell pretty much all of my long positions. I am keeping some Bitcoin that I just have for allocation across different asset classes, right? So I still have some Bitcoin to balance out my stock portfolio and my property and my gold and my long-term government bonds, right? I still want to have a balanced portfolio of everything. So I'm not going to sell all my crypto. I will ride some Bitcoin through a bear market, but for the Bitcoin that I want to time somewhat, that I'm more actively speculating with, I'm going to exit all of that once we fall below. So yeah, the cross of the 120-day simple moving average was a reason for me to exit everything. I also sold all of my altcoins, all the long positions of altcoins, of course. The short positions I kept open. Here I've now also added that 120-day simple moving average to our chart. So there we go. We had been very, very close to breaking that moving average in that last video. Let's now look at the next video where we had been clearly below. By the way, I'm sharing all of my trades in a premium Telegram group as well. So over here on the 19th of June, I've announced that we have closed below the 120-day simple moving average. I'm selling all of my speculative Bitcoin and all of my altcoins. I keep and I cut this off from here. I keep the ABC and XYZ short positions, right? I'm not going to disclose this now on YouTube because those positions are still open. So let's have a look at the video published after the crossing, right? So on the 26th of June. Welcome to another premium update. Today on the 26th of June, 2024. Things are turning quite bearish. Bitcoin tends to fall. We should diversify across asset classes. I know it's not necessarily a sexy topic, but I made a separate tutorial video on this again. We are going to talk about how to navigate markets like this because I really do not want that you guys get burned here. A lot of people simply just get excited about meme coins when times are good, but when times turn bearish, you definitely want to make sure not to burn yourself holding a broad basket of hyper risky coins and then see your net worth fall by 50, 60, 70%. You do want to avoid this. But let's have a look at the market first. What we've got over here is Bitcoin with its best moving averages. And Bitcoin did close below the 120-day simple moving average. And I did announce in the channels, both in the Gerhard Trade channel, but also in the announcement channel, that I'm pretty much 100% risk off now with my crypto portfolio. I still have the short open, but all of my risk on Bitcoin, all of my altcoins are now sold. And since we closed below that moving average, we've so far fallen by 5.5%. Now, I don't have a crystal ball either. I don't know if you're going to shoot above the moving average again. I would have to buy back in at that point. But right now, things don't look that bullish on several fronts. Now, there are two interesting lessons from all of this. I think the first lesson is that it's very important to have some kind of quantifiable approach, be this on-chain data, be this backtest, whatever it is. Having some kind of data that takes us away from the gut feeling is important, because when times look bullish, then prices tend to be high. When times look very bearish, then prices tend to be low. And the problem is when we just follow our gut, we're probably not really making the right decisions. The second learning here is that I believe when things don't look that great anymore, it actually makes sense to de-risk even more. In the first video, right, where I sold 10 to 20% of my Bitcoin, I didn't sell everything. I only sold parts of the Bitcoin. And I had a very similar behavior in April of 2021. So in the prior bull run that brought us from 3.5K all the way to 69K, I sold most of my Bitcoin somewhere around the middle of April. At the time, the best backtested moving average had a slightly shorter duration. But still, in hindsight, it would have been better to sell even more aggressively. And it's the same this time, right? Once things don't look that great anymore, it does make sense to be pretty aggressive in taking profit. That mistake didn't cost me a ton. I still sold pretty much everything after a drop of another 9%. But I remember how my thinking when selling at the time was very similar to 2021. I justified selling at the time simply just to rebalance my portfolio. But actually, I shouldn't have just rebalanced the portfolio. I should have aggressively gotten out of the market. This is likely a problem with confirmation bias, right? Because we want the rally to continue, right? When we are bullish on an asset and then we consider selling, then probably because of our rose-tinted glasses, we should be selling much more aggressively because objectively we are probably very high. We want to tell ourselves a positive story. And when we are moving from hyper-optimistic to somewhat neutral, what's probably happening is that we are moving from neutral to bearish. Again, because of our confirmation bias, because we are invested, because we want to see things better than they actually are. So yeah, I've talked a ton about premium, so feel free to check it out. If your crypto portfolio is above $5,000 or so, it should be worth it to you. If your crypto portfolio is smaller than that, then feel free to also join our free Telegram group. The link is as well down below. Looking very much forward to chatting with you. Cheers.